Each asset class is unique in its own way, has its unique set of characteristics with respect to the risk and returns, and as we progress along this course, you will realize that it has a role to play in your personal finance. And once you understand what role each asset class plays in your personal finance, then you will be better positioned to take a decision with respect to whether you should invest in a particular asset class or no. Go right now and click on the link in the description below and register for our course Namaste Money. A common question that I get asked is, should I invest in all the 5 asset classes or should I invest in only some of the 5 asset classes? To help you answer that, let's look at some of the numbers, because numbers are the best way to understand what you should be doing and what you should not be. If I were to bring all the 5 asset classes on a single table and you invest 5 lakhs in each of the 5 asset classes, we know our expected returns for the 5 asset classes. We put them down here, and let's assume that we park the money in these 5 asset classes for the next 30 years and let them stay invested. What do you think will be the amount that you will receive at the end of 30 years? It's a simple mathematical calculation which you can easily do in Excel, which is the amount invested multiplied by 1 plus the expected return to the power the number of years you are investing for. If you do this, you will get the final value that you will receive at the end of 30 years for each of the asset classes. So if you are invested in a savings bank account, you will expect a return of 14.03 lakhs. A fixed deposit will mature at 50.31 lakhs, whereas gold gives you 66.33 lakhs. A real estate investment will give you a return of 149.79 lakhs, whereas investment in equities, which is the highest risk, highest return investment, will give you a return of 429.24 lakhs. Simply put, your fixed deposit give you a return of 3.6 times your savings account. Gold is at 4.7 times, real estate is 10.7 times, and equities is at 30.6 times. So you see, over a period of time, the amount of wealth creation that happens in a product like equity is substantial compared to a low risk, low return product like a deposit. If you were to invest in an asset class which is low risk, low return, you will expect steady returns, but wealth creation will never happen in your portfolio in the long run. If you put all your money in an asset class like equity, then the risk exposure that you have in terms of the variability in returns is way too much for you to digest as an investor. If we revisit our risk pyramid, you will see that if you have a good base of your steady growing asset classes, then it allows you to take the risk in the high risk, high return asset classes without being too much worried, because you have already built a steady base of your low risk, low return asset classes. If I were to invert the pyramid, what do you think will happen? If I start investing with equity as a major part of my portfolio and it is a high risk, high return, it actually does not help me sustain the pyramid, right? What happens is, when I have a strong base of low risk, low return products, it gives me a good launching pad to take that extra risk when investing in a product like equity or real estate. Versus if I do not have any portfolio to talk about and I go all in with investment in a high risk product like equities and I suffer losses there, then I do not have anything to fall back on. Irrespective of the risk return characteristics of the different asset classes and the different products within an asset class, each of them have a role to play in your personal finances. And the role they will play, as you understand, you will know exactly when you should pick a product depending on the stage of life you are in. As we have seen, there is no single formula in terms of how much asset class you must own and at what point of time, but our objective is to give you enough pointers to understand which asset class is appropriate for you at what point in time. Hope you enjoyed watching this video as much as we enjoyed creating it for you. So what are you waiting for? Go right now on the link provided in the description below and register for our course Namaste Money. This course is an online course which will teach you all the basics about your personal finances and answer the questions of where you must invest, how you must invest, and more importantly, why you must invest in a particular investment product. Also, don't forget to like, share and subscribe to our channel for freshly brewed content from Wealth Cafe. And don't forget to save hard and invest smart.